Michael, nice to have you with us.
Yeah, thanks for having me.
Always. Listen, love to just start off on, we just said it, I think it's 129,000 roughly, coin, average price of 30,700, spent about $4 billion on it. One would anticipate if the price stays where it is, that's going to cause a significant write-down overall. At least your auditors may ask for that. You know, you've talked for years about the financial flexibility owning all that Bitcoin gives you. I wonder if you believe it also works in reverse.
No, I think it's been a net positive. We back-tested our strategy against every other alternative. And if you roll the clock back to August 10th of 2020 when we embarked on this journey, Bitcoin's performed 10x better than anything else. Gold's down 10%, NASDAQ is flat, Bitcoin is up 86% since that time. Over any time frame, 2 years, 4 years, 8 years, Bitcoin's the best performing asset. I can't come up with a better idea.
You can't come up with a better idea. Does that mean that you would actually consider buying more at these prices?
Yeah, I think if you think about Bitcoin, if your time horizon is 1 month, it looks like a volatile risk asset. But if your time horizon is 10 years, it looks like a risk-off store of value asset. So the crossover point is 4 years. Nobody's ever lost money investing in Bitcoin for 4 years. And if you want a surrogate for the book value of the Bitcoin network, it would be the 4-year simple moving average. The simple moving average of Bitcoin over 4 years is about $21,685. Bitcoin's only touched that point a couple of times in its history, and those have always been great buying opportunities. Right, this is Bitcoin's on sale.
We're touching that price right now. It's funny you should mention it. So is it a great buying opportunity?
Absolutely. Bitcoin's backed by the most powerful secure computer network in the world. If I gave you $100 billion, you can't reproduce it. And it's beyond a nation state attack or corporate attack. So once you understand that and the fact that it's a singularity, there's nothing like it in the world, then yeah, this is an ideal entry point to get into this thing.
All right, but you've also taken on debt in order to actually accrue that position, which does incur a certain amount of risk, doesn't it? I mean, I know, you've got, 6 and a 1.25 senior notes. They're, 2028. You've also got maturities that are out there, but there's concern in the market about margin calls, about collateral calls, certainly on some of this debt. Can you clarify for us exactly what those are under the covenants that you currently have and how they may impede your financial flexibility?
Yeah, sure. On a multi-billion-dollar balance sheet, we've only got a $200 million loan that we have to collateralize, and we're 10x over-collateralized on that right now. If the market traded down by a factor of 10, we've got cash and we generate cash flow. So this has all been, the margin call thing has much ado about nothing. It's just made me Twitter famous, so I appreciate that. And the Twitter trolls love to beat up on me because it gets them engagement. As for the company's balance sheet strategy in general, we borrowed $2.2 billion at a blended interest rate of 1.8% before interest rates doubled. Junk bond index is from 426 basis points to 820 basis points. Mortgage rates have doubled. If you had a chance to grab $2 billion at 1.5% interest, it seems like a reasonable thing to do, and I'm glad we did it. Most of it is unsecured debt. 1.7 billion of it is unsecured. The 500 million comes due in 7 years after we borrowed the money. So we feel like we have a fortress balance sheet. We're comfortable, and the margin loan is well managed.